Hey guys, hope you are all having a great day so far. As we close in tomorrow, we need to talk about some important developments that have happened in the market. I expect serious volatility this week, especially with new market catalysts that have been placed to happen this week. Before we start, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. All efforts are aimed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive right in. I never in a million years would have thought this channel would turn to cover every little news regarding a potential Russian invasion, but yet here we are. Every little shift, every little piece of news that hits the web is having a very direct impact on the stock market, and we must be alert to each of them to understand the full scope of everything going on and to be properly prepared. U.S. stock markets were closed today for President's Day. Futures for the S&P 500 declined 0.6% today, however, while contracts for Nasdaq fell 1.1% and futures for the Dow Jones Industrial Average dipped 0.2%. I spoke about this on Twitter. The MOASS, which is Russia's benchmark stock index, shed 9.9%. Russian and Ukraine's currency both fell against the dollar after some very volatile trading. Things got really bad today after Russia said they had destroyed 2 Ukrainian armored vehicles inside its own territory, but they did not cite or provide any evidence of this. This is being interpreted by Western leaders as Moscow seeking any sort of pretext to mount or incite an attack. Like I explained yesterday, it is very hard to price things in a geopolitical risk. Over the weekend, the situation certainly worsened, and tomorrow I think we are set to experience some serious bearish sentiment in the market. Investors in Wall Street are beginning to worry that the prolonged conflict between Russia and Ukraine will maintain inflation elevated because it will disrupt supplies of important commodities. But perhaps the biggest news that came today was when Putin formally recognized the independence of 2 Moscow-backed breakaway regions in eastern Ukraine where Russia has been supporting separatists for 8 years. This was perceived as a dramatic provocation and possible pretext to invade Ukraine. Things have shifted with this move, and we could actually start seeing Russia make serious moves. This is my opinion, but I think Russia's MO is to go in to allegedly support the separatists' attempt for independence. They will roll in to ensure that there is a so-called fair election. Having Russia move in to secure an election is perhaps the funniest thing in all of this, since Putin himself constantly kills of his political opponents or throws them in jail for made-up charges. The United States and European allies quickly announced sanctions. Already, experts on the news are saying Moscow's formal recognition will scuttle the ceasefire agreement that was implemented. The White House will soon sign an executive order to prohibit any U.S. investment and trade in the Ukrainian breakaway regions, with any party who operates them being prone to getting sanctions. The move by Russia is a blatant violation of international law, and I fully expect some serious sanctions to take place in the coming weeks. Another important development that took place was that Biden accepted a meeting with Putin in principle if Russia doesn't invade Ukraine first. The Kremlin said there were no concrete plans, but did not rule one out. The recognition of Ukraine rebel regions as independent is a very big deal, and changes a lot of things completely. It gives Russia an angle by which to operate and excuse an invasion. It is very similar to what the United States did with Texas before they made the annexation to bring it into the Union. I am no longer more biased towards a path of no war, especially given the magnitude of this escalation. I do find it less likely, but I am no longer as firm on that stance. I am remaining neutral from now on. With this in mind going into this week, I have little to no hope that this will be a green week. Unless Russia and Ukraine reach an agreement of some sort, or one starts backing down, there will be no stabilization in the markets. They will run volatile until something happens and things can get priced in. We had some important economic data come in today. Despite the frustrations of disruptions led by Omicron, the economy continues to perform very well. Retail sales jumped by 3.8% from December to January. This is better than the 2% increase expected by economists, and marks the biggest jump since March of 2021 when stimulus checks were sent out to qualifying Americans. This ought to give investors some relief in the coming days. I want to quickly talk about the changes that both the current Ukraine situation and rate hike inflation will have on the markets overall. With everything that is happening, markets, and especially Wall Street, are at a very vulnerable position. One way or another, there will be a washout in the sector, and there will be tons of losers coming out of all of this, more than you actually think. At the end of it all, I think we can all properly assume that billionaires are going to be crying the most. Wall Street and friends are undergoing serious changes. The Fed is about to raise interest rates from near zero for the first time after more than a decade, and they will raise them multiple times. Companies that used cheap capital to grow rapidly without making a single quarterly profit will now be snapped away from existence. The Fed is Thanos, and they are now forced to snap all types of assets that not even a year ago we saw rising and driving tons of investors in. I said it before, this is a bear market year, and it will be a full roller coaster while everything settles. People making risky bets, like Cathie Wood, are about to face the challenge of their lives, one that will either make them stand out as intuitive investors or relegate them to the history books as to why you should never put all your eggs in a risky basket of unprofitable companies. And this is honestly the Fed's fault, led by none other than Jerome the Joke Powell. They had made money easy to borrow, and it birthed all kinds of garbage ideas in companies that had no reason existing at all. In other words, their lazy policy making allowed for Wall Street to really operate without any consequences. They could take and make all kinds of risks and still remain highly profitable. You got a lot of CEOs making high promises while consistently underdelivering every quarter, and now the time has come, and those without the promised results are going to get run over by rates. And then something even crazier happened. During the pandemic, trading apps made it super easy for people to get into trading, and short sellers and value investors were discredited as being out of touch, and that their place in a rapid-moving market was obsolete. Well, these critics may have spoken out of turn, because they got so high in their own short-term success on a bullish market that they forgot to account for a little thing called inflation. Coming in at 7.5 and with economists saying it is bound to continue growing, those holding bags on risky assets are about to see their short-term gains erased. And what is Jerome Powell's magnificent plan to handle all of this? He expects to pour some rate hikes, meaning debt will get more expensive to pay off and investors will be forced to look at how companies generate cold hard cash, instead of just accepting empty promises. This is the make it or break it. Fundamentals matter, and with rate hikes, they will no longer be ignored. Companies like that have performed well because of good stories or charismatic board members or because of unexplained rallies will be reassessed by institutional investors, and their prices will fall. Good thing for AMC and GameStop is that both are owned mostly by retail, and any dip will be rebought. But for everything else in the market, some hard times await them. Companies will find it harder and harder to find investors if they can't show how they will generate cash to fund its business, and they will also find that it didn't matter if they doubled or quadrupled in the last few years. The market has had its rally for a long time, and it magnified in 2020 as a result of the pandemic and all the printing the Fed did along with the stimulus. Now, it's time to pull back unless we want a full-brunt economic recession, and the dozens of millions of investors who didn't do their homework on value investing or formulated a correct diversified portfolio will, for the most part, see losses that will erase probably years' worth of gains. I am super confident in my purchases, and have talked about some of the diversification that I have done in the past months to create a well-balanced portfolio. You can come to my Discord and see what I have said. Again, this is a bear year, and we are set for a market correction. Many see and hope for a market crash, but once again, I think the housing market still has tons of legroom to keep on bubbling as it has been, and I don't think it's ready to pop. Without a housing market ready to crash, I don't think the stock market crashes. Also, investors are incredibly bullish right now as well, buying the dip at every chance they get, and though many will be faced with serious losses this year, we are still not at a point where people have stopped spending. In fact, like I said, consumers are more bullish than ever, and that alone I think will prevent markets from really collapsing. I think we are closer to a market crash, but I don't think this will be its moment. Let's talk about our two favorite stocks. Beginning with AMC, I think tomorrow it's likely that it will retest 15 again. AMC has a really important support line at 14.50, and if it breaks, we are going to be testing 11. Market conditions have had a profound effect on meme stocks, as shorters continue to shake it down and compound the losses. Because we are going off of daily news, there is literally no way anyone can point out to where we are likely to go. Everything is too volatile, hanging on threads. Resistance for this stock will be at 20, 22 and 26. I don't think AMC will be in a spot to start moving up this week unless there is a cool-off from the current situation in Europe. GameStop on the other hand is also likely to retest $100 support again. Below that, it will find more support at 95 and 86. Resistance will be met at 124 and 130. I find it unlikely for GameStop bounce up this week. Too many bearish news and pressure that will be compounded by shorters. Get ready for another discount. And that is all I have for you guys today. I want to thank you for watching my video. Today we covered a lot, but with so many changes happening, it's hard to truly do any topic justice. I will keep you guys updated every day with everything that is happening, so be sure to stay tuned and join my Discord. Let me know in the comments what you think of the video and come join my Discord for more market discussions. If you want to support this channel, links are below for PayPal and Cash App for one-time donations, and my Patreon is there if you really want to spoil me. Enjoy the rest of your day and to the moon.